This is the FFR Trading Market Minute. Again, we're looking at the SPY. We've been tracking this week to week. And last week I mentioned we had some divergence on the daily chart here. And I was expecting we get a pullback to the 20-period moving average. Now, I was expecting that it would happen here. This was Thursday when we were doing the market minute. We didn't. We got a couple of days, a rally, new high, and then the pullback right to the 20-period moving average. And if you remember last week, I felt that was probably the extent of the pullback. And you can see here we are today with a nice outside gap up here. They did not fill the gap back to yesterday's close, so there will be probably an open gap below the market. So there'll be some potential to fill that gap at some point, about an 80% probability to fill this gap at some point here in the future. I've got an upside target here at 700. It's just a round number target. I think if we can sustain this today and we close, up kind of where we are here, we'll have the RSI back above its moving average. We'll have price back above the 20-period moving average. And whatever the high is, if that high gets taken out, tomorrow, maybe Monday, we got a good shot. I think it's seeing that 700 target. Now, the fly in the ointment may be this outstanding tariff news that we're expecting for the Supreme Court to release their ruling on whether or not the Trump tariffs are legal and so forth. And there's going to be some shuffling going around, if that is the case. If they do rule against that, I think they have plans in place to redo the tariffs in a different way, something that is or would be considered legal at that point. And then there's the determination of whether the companies have to be paid back. So I think that, is a potential, event where the market may have to get repriced if that's the case. So what I'm saying is, long story short, manage your stuff. Have your stops in place. Things could get volatile. We've seen what tariff news has done in the past. So just make sure that you dot your I's and cross your T's on your risk management. But at this point, we are certainly more bullish than bearish here. And having said that, remember I did speak about last week the monthly chart here. I'm just going to pop over here. And again, we've got a higher high. So we have our oscillator, which is overbought. We've got a higher high here. The oscillator on the RSI here looks, depending on where we close the month at. So we're only halfway through the month, but depending on where we close the month, just keep an eye on this. If we do have some divergence at the end of the month, that will certainly be a warning sign. If you look at all the kind of fundamental indicators, your Buffett indicator is strongly overvalued, or the market is strongly overvalued. I believe there's a Hindenburg omen. I'd have to go back and check that there was a Hindenburg omen in January that has not been confirmed yet. But that gets confirmed, and we end up with divergence at the end of the month here. The Shiller PE ratio is certainly overvalued. We're over 40 last time I checked. 30 is a warning sign. We're at 40. I think the all-time high is somewhere near 45 on that Shiller PE ratio, going back to the before the crash in 2000, the tech bubble. So again, just the economy seems to be okay. The jobs picture. Inflation seems to be, kind of holding its own, if you will. But again, we watch the signs in the market, the technicals, and some of these fundamental indicators that can give us a heads up. Similar to what we got, like I said, back during this period, we had this divergence where we had a high in the oscillator, a high on the price on that month. The S&P continued to make new highs. The oscillator did not follow. We got a lower high, and then we got that crash back in March, April of last year. All right, so just be on your toes, and we'll take a look each week and see how things are setting up and shaping up here. Economic data is set for next week. Well, Wednesday kind of kicks off at 8:30 a.m. with the president's speech. That can always be a market mover. Thursday, we've got gross domestic product, core PCE, and then Friday's S&P Global Manufacturing PMI and Services PMI. Hope you have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.